At Alpha Morgan Capital, we know that wealth creation is not just for you alone, but for the next generation as well.
That's my boy!
Congratulations, dear!
We at Alpha Morgan understand that every effort you make daily is a journey to create sustainable wealth. That's why Alpha Morgan stays committed to helping you sustain generational growth in wealth so you can focus on other things. Alpha Morgan, funds management, investment banking, financial advisory. Alpha Morgan, your investment banking institution. Go to www.alphamorgan.com. Call 081-5171-7171. Alpha Morgan, growing your wealth.
I'm honored to be here again. We'd like to share the screen. So if you just give us 1 minute to share our document. Can somebody confirm that you can see the screen? Madam Ade, you're muted. Can you see the screen?
Yes, I can see the screen.
Okay, good. All right. Good morning, everybody. Let me stand on existing protocols and let me say again, I'm honored to share my perspective with investors who are in the business of making wealth. Right? But let me start off by saying wealth is the definition of what we call economic surplus. And therefore, you make wealth, you preserve wealth, you accumulate wealth, right? And you can also destroy wealth. So the fact that you are wealthy today does not mean that you'll be wealthy tomorrow. So you've got to go into the concept of wealth. It's interesting that only yesterday, Joe Biden decided to introduce what we call, or is proposing what they call a wealth tax, in which case billionaires in America, it's a billionaire's tax, are expected to cough up about $360 billion over 10 years, which comes about $36 billion a year. He's saying this because the wealth tax, people like Zuckerberg, people, what does wealth tax mean? Wealth tax as against capital gains tax. Capital gains tax, like when you see Aliko Dangote is worth $12 billion. It doesn't pay tax on $12 billion. $12 billion is what he is worth, which the stock market has actually attributed to him. He pays the capital gains tax when he cashes in and sells those stocks. But now what Biden is saying that whether you cash in or not, you will pay a tax. So that's it. I just wanted to bring that on the table. We're bringing that up because America has a deficit to fund. America has the palliatives to fund. America has a stimulus infrastructure plan. They also, over and above that, they have the war in Ukraine to fund. So I want to contextualize this so that we are looking at everything together. And there's an election in November, midterm election. And it's between the conservatives and the liberals in America. I'm saying this because wealth is not a universal and a global phenomenon. You can't be a wealthy man in Sokoto and be a poor man in Accra. Your wealth must translate into global wealth. If not, it's of no use to you. And so when you see a wealthy Nigerian who has no access, who cannot transfer his money to other markets to buy things, he becomes, I don't want to use the word wealthless, or becomes poor. So you investors listening on the Alpha Morgan program today are asking yourselves, how do I make wealth? How do I preserve my wealth? How do I accumulate my wealth? And what am I going to do to stay wealthy, not only here, but overseas? I cannot be a wealthy man in Nigeria, and I cannot pay the school fees of my son in the United States. I cannot pay for medical bills. So we must see wealth in its universal form. I just want to set some context. Today, we are going to be talking about global economic and investment landscape and why it's important. Because the investors here are looking for returns. And if the rate of return you are getting on the stock market, the rate of return you are getting on your money market portfolio in Nigeria is averagely maybe 4%, while the rate of inflation officially in Nigeria is 15.7%. You are losing 11.7% just by going to bed. That means you're losing 1% of your money every month. In other words, if you started off with 1 million naira in January, you will be worth 900,000 naira in what money can buy terms in December. That's if you kept the money under your mattress. If you invested it, no, if you kept the money under your mattress, you will lose 60%, you lose about 1.2%, 1.3% every month. But if you put it in a bank and you got 4%, then you'll be losing 1% every month. But if you move the money outside of Nigeria for one other reason or the other, through some other means or means, you might be making significantly higher, or you could be losing everything if you went into some type of risky investment. So this is time to be cautious. So we're looking at the global economic and investment landscape. We look at the domestic investment climate to see whether you want to invest here. And if you are to invest here, because your money is trapped here, what do you invest in? We look at the economic indicators which are pointing to, which are looking at the direction of the indicators. And we look at leading indicators. We look at some coincidental and then some lagging indicators. We look at the policy options and outlook for the next 2 to 3 months. And we look at the risks that we run. All of us went to bed yesterday or sometime, not knowing that some people will detonate the rail line between Kaduna and Abuja. And all of you know what has happened. A lot of people have been abducted, a lot of people have been killed. And that was a risk that the day before, there was an announcement, that was 2 days ago, that some gunmen went into Kaduna airport and killed somebody and all of that. Then the government denied that it was not, that the guy who was abducted or killed was a farmer in a place next to the airport. Then today, these guys detonated the rail line, stopped the train and took people away. So what next? Then we'll look at the summary and conclusion. So the risks are unfolding so fast. Today was supposed to be a celebration day for the birthday of the APC leader. The president was supposed to come. Nobody can come into that to come and celebrate anything in the midst of this kind of confusion. So you see, 24 hours is like eternity in politics. So when we look at the political landscape, and I tell you, if I told you yesterday, oh yes, there's going to be this, there's going to be a big ceremony, everybody's out, they've taken the actual B for the 70th birthday of the leader, the APC leader in Lagos. And you went to bed, you would have believed if this webinar took place yesterday, all of you would have gone away and said, oh, Mr. Rewane said that. We need to wake up this morning and say, you see, if I had a crystal ball, I can tell this, what they say in Shakespeare says, if I can tell the sounds, what they call the seeds, if I can look into the seeds and tell those that will grow from those that will not grow, right? Then I won't be here. In fact, you won't need Alpha Morgan. Everybody will come to me to come and decide what seeds they should plant and what seeds they should discard. So this business of forecasting or trying to forecast is laced with all sorts of probabilities. And probability theory tells you that there's nothing with 100% probability and there's nothing with 0. So two words that economists do not use is never and always. Those things are taken out. The economics dictionary have those 2 words because nothing has a 0% probability. And I tell my colleagues all the time who write categorically sweeping statements without thinking it through that that's the danger of making those statements. You don't know what's going on. So we always say mainly attributable to this, the possibility, we guide ourselves because we don't know what's going to happen. Okay, so the first thing here is about what the probability that the US will go into recession again. The US has had a time between, there have been many recessions, but the time between recessions in the last 30 years has been almost a 4 to 5 year cycle. That's what it is, the business cycle. But recently we've had an extended period of growth without any interruption, right? And that has happened since the Obama years, the Trump years and all. Now, but things are so uncertain that we don't know. Now, there's something which we call the yield curve indicator. If the yield curve becomes inverted, normally a yield curve is positively sloped, which means that the gradient shows you that the longer the maturity of an instrument, the higher the return. In other words, if you bought a 10-year bond, the return on the 10-year bond will be much higher than the return on a 3-year bond because you are parting with your money for 10 years based on inflation expectations. That's what we call a positively sloped yield curve. And typically, there's one yield curve. When you have an inverted yield curve, it's like having what we call in economics, we call the king demand, where a point comes where the demand for a product begins to fall in spite of the fact that the price is falling or the supply. I think it's a king supply curve. So the higher the price, then the supply begins to drop in spite of the fact that the price is increasing. There are reasons for that phenomenon. But once you have a king curve, it means that you've got to explain why is it inverted and at what point is it going to be inverted. The inversion is a result of expectations that something definitely is going to happen. So recently, in the last week or two, we've started seeing an inverted yield curve, long-term yield curve, which means that people are betting on two things. One, that this war is not going to last as long as we said, or it's not going to be catastrophic. Two, that the inflation spiral that you've seen that has gone all the way from 2 all the way to 7.9 is going to turn around. And when it turns around, people who are investing for 10 years are now saying, no, the rate of return I expect for 10 years is going to be lower than the rate of return now, right? Which means that there will be a recession first before that recovery. In between, that is in the next, so if a 10-year curve is going that way, you could have a recession anytime, not immediately, but who knows? And after a recession comes normally a boom. So I think that is critical, right? That is critical to this whole process. Now, the thing to worry about now is how will this affect us in Nigeria? Because you are dealing with in the recent years, we've seen inflows, diaspora inflows, and all those other things begin to drop, which means, and capital flight, Nigerians are taking their money out of the country in one way or the other. Okay? Sorry. All right. So that when you begin to have that, if Nigerians are not bringing their money in, because every time you look at it, say hot money, and we'll get to the slide where it is put here. The thing is that it is not just money not coming in. If money doesn't come in, money is not static. It means that money is going out. Whatever made it unattractive for people to bring money, Nigerians abroad bring their money in, is what is making it attractive for Nigerians who are here to take their money out. There's no static situation. Everything in economics is dynamic. When you start this morning, by the time we meet again 3 hours from now, it would have changed. Nothing is static. If it's static, it's just an aberrational thing. So you have to ask yourself, why has it changed? Or why has it not changed when change is imperative? You can't just say, this is the information. No. Why has it not changed? Why has it changed? What is making people do this? And remember, for you investors, there are two things that are important. Remember this, and remember very loud and clear. In the short run, you look for direction. In the long run, you look for value. Remember that and write it down. I remember it every minute, every morning, every afternoon, every night. Short run, you look for direction. Long run, you look for value. So if you say, oh, the Naira has depreciated this morning, or the Naira, something has happened to this, That is direction. Long run, what does it mean to the value of my portfolio? Right? Remember this, and I want to say it clearly. This is the first number one rule they teach you in the business schools. Short-term direction, long-term value. Warren Buffett, the Oracle of Omaha, who runs Berkshire Hathaway, you know, everybody in this room knows. If you haven't heard of Berkshire Hathaway, then you need to be checked. Now, Berkshire Hathaway says there are two rules. Number one rule, do not lose money. Do not lose money. Number two rule, do not forget rule number one. Right? To show you how Berkshire Hathaway is, every year there's an auction for people auction and bid to have a 30-minute lunch with him so that you can have a discussion with him for 30 minutes. He's a very frugal man. He's 91 now, I think. Very frugal, he doesn't spend money, and he has billions and billions. He's worth about $95 billion. And last year, in spite of COVID, the auction, the person who won the auction paid $2 million to have a 30-minute lunch with him in in a hamburger shop. You know, the lunch itself was $10, but you paid $2 million to have 30 minutes of one's time. That shows you how smart and slick Warren Buffett is. So Warren Buffett has been buying some things recently, and anything he buys, he hides whatever stocks he's buying. He buys through all sorts of names and all of that. But if he decides to buy Nigeria today, within 5 minutes, everybody in the world will be buying it. So he keeps his ideas to himself. So I think Warren Buffett started buying a couple of stocks recently, some hotel stocks. Warren Buffett was the one that bought Apple way back. He bought Gillette, the time when he said that there's nothing you can do, you have to shave. You cannot stop your hair from growing anyway, so you have to cut it. So those are the kind of ideas he had. Now that people are not shaving and all that, it's a different story. So he's also betting on the fact that interest rates will increase, will begin to decline, and so he's taking a much more aggressive look. Now, what are we seeing? Most central banks in the US, in the world, Federal Reserve, the Bank of England, Bank of Canada, European Central Bank, all of them are increasing interest rates. They started the process, but you see, when you hear an FOMC meeting in the US, as distinct from our MPC meeting here, the FOMC meeting, you listen to the decision, but you listen. More importantly is the guidance. The guidance that Jerome Powell gave was that, yes, we've gone up by 25 basis points, but we're going to increase interest rates at least 6 times this year. And that maybe by the end of the year or next year, the rates would have gone from 0.5 to 3% per annum. That message alone sent the entire financial system in the world into some kind of shock. But when he gave that guidance, the Ukraine war had not escalated to where it was. Now, what has happened today is that there are peace talks taking place in Turkey. So the chances are that things are going to change. 2 days ago, the price of oil was about $123 a barrel, Brent. About 2 weeks ago, it got up to 140. I think today it's about 111, probably lower. Here I see, because West Texas Intermediate is about 105. So it's about maybe $109 a barrel. I can bet you by 10, if those stocks are going in a particular direction, that price of oil is going to come down to about almost maybe, let me say $90. However, another big event is that the Iran deal is almost being signed. If the Iran deal works, then there'll be 2.5 million barrels of extra oil in the market. So we could see the price of oil drop to 65 or 70, or even lower. And if that happens, then we'll come back to what the options for Nigeria are. It will not just be. So these are the things we are seeing. We've also seen that foreign direct investment flows have increased, but 2021, 2020, from 2020 to 2021 to 2022. But in 2021 and 2020, the average interest rates in the US were 0.25, 0.1, 0.2. Now it's different. I had an investment banker come to see me yesterday from Geneva, and he talked about what kind of products they have. And he told me about their commodity sensitive products with the structure. But he also told me about the Qataris deal backed by the Qatar National Bank, which this bank is buying and then selling to investors, and you get a guaranteed return of about almost 3 to 4% per annum. There was a Nigerian bond that was being sold on a yield to maturity basis of about 6 to 7%, and nobody wanted to touch the Nigerian deal. So foreign direct investment has increased, but the investors are becoming more sensitive and the expectations are high. But in spite of the fact that foreign direct investment flows have increased, they are not coming to Nigeria. Okay, so if Nigerians say, who cares? We don't need your money. But you have to care, because some of you on this call are also taking your money out of Nigeria. So if money does not come in 1, 2, money goes out, then there's a problem. You know, that if you are in a bathtub and you've mixed the water, right, and hot, cold, and warm enough, and then you're inside, you want to rest. Without your knowing, if once something opens and begins to leak, before you know it, the bathtub will become empty and you'll be as cold as anything. So it's important to know, 1, if water is not coming in. 2, more important to know is whether water is going out, right? So I think that's the way I look at that. Now, there's also the global investment environment. Money is, first of all, money is fungible. The days are past when I have to carry your naira, carry your gold, Now, with a credit card, with a phone call, with a simple online transaction, you can make payments anywhere. If you cut yourself off, like we are trying to pay $35, $40, and so we are looking for different cards, you are only making life difficult for yourself. The Nigerians will still pay, but it will be more expensive, and they will pass on this increased price to the consumers. But if I have to go through all sorts of ways and means to make my payment, once the goods are coming to the country, you will pay for it. Nobody. So all these Porsches you are seeing here, all these buildings, all these things, that none of them are made in this country. Because you have made it more complicated and more difficult, people are paying more. If you bring in a drip, or people go to these hospitals and all that, when you go there, they are paying infinitely more because you have made it complicated. As a matter of fact, you are better off just allowing the monies go in and out and pay the real price than fooling around. But I like it or not, at MRS this morning, I saw the price of diesel 640 naira a liter. There's nothing you can do about it. There's nothing. If you want, you cannot subsidize diesel. So if the price of diesel is 640 and the price of petrol is 165, everybody knows that both of them will be moving together. So there can be a 400 naira, 400 to 500 naira difference between one and the other. Somebody is paying it. And that man who is paying it is everybody here. Okay, so the investment environment, as we can see, there's coordinated monetary and fiscal policies, but money will move from one market to the other. Now, so what are the things that are important here? We have interest rates, inflation and real rate of return. We have exchange rate. I've talked about this, and these are very, very important things. So as you sit down here, you can ask yourself, if you drive along Lagos to Lagos to Ekpe, on both sides, and go to Banana Hill and go to Lekki, people, high-rise buildings, why are they doing this? How are they doing this? You know why? I can tell you for free that as elections are coming, the possibility that there could be a change in government, even if the same government says there'll be new sheriffs in town, right? And people are going to be investigated. So the surest way to carry out money laundering is all of these properties that people are building all over the place. You see, every minute you put on television, it's Revolution Plus, this, that, you know, Adrian homes. People are buying homes. People cannot get their money out of the country just buying properties through all sorts of names and means because there's no BVN for property. So we are looking at investments. You have real estate, you have money market, you have equities, you have foreign currency, you have Bitcoin, you have all of these things that you have to look at and decide one. Remember, long term, you look for value, short term, you look for direction. So if you look at if the Naira is 590 this morning, direction. Long term, where is it? Where's the value going to be? Should I keep my money in Naira? Should I keep my money in dollars? Should I keep my money in real estate in Ekpe? Should I put my money in real estate in the Lagos-Ibadan pathway because the rail has started going? But if you now know that the rail was derailed between Kaduna and Abuja, you will only nobody everybody say I'm not going to go on the Lagos-Ibadan because it's only because of time before they will take me and then take me to the bush, right? And then it becomes a problem, right? And if they can do that, tomorrow they will enter an aircraft and hijack the plane and take it somewhere. So security risks have various issues that I will come back to the end. I'm taking this presentation, I'm addressing it in different levels. But you have to understand this, that when you are looking direction, looking for value, then a risk that all of these things will unravel are things that, and that's the purpose of this presentation today. We are in political times. Politics is trumping economics. Everybody is making an economic decision, but at the end, what happened in Ukraine is a political decision. What happened to Chelsea is a political decision. What's happening to Swift? What's happening to American Express, Visa, MasterCard are all political decisions. They're not economic decisions. Economics has a basic assumption which we call ceteris paribus, all things being equal. Okay? And are things ever equal? I'm not sure it is. Yeah. So the other thing we're looking at, even if you have a market, is the market liquid? We are going to look at the Nigerian stock market. How liquid is it? In a market with 17 trillion naira of market capitalization, yes. I'm right. If you have a turnover of 4 billion naira in a day, it's 0.001. That cannot be a market, right? That is not my understanding of a market. Market liquidity is very, very important. So how are investment decisions made? If all of us who have MTN stocks decide today to sell the stocks, who are the people that are going to buy it? MTN market capitalization is so many trillion. So it will take 40 days of normal average daily turnover to buy only MTN stock in the morning. So that won't happen. Look at the market capitalization in the US and look at the average daily turnover. You can see it for yourself, right? So again, that's what, if you look at the left side here, say investment decisions are made based on portfolio diversification, market liquidity, and you cannot say that you are what. Okay, yes, we talked about Warren Buffett being worth so much. We talked about the billionaires being worth so much. If Dangote says I want to sell my stock today. So Dangote, 5 trillion naira. The market, we will need to wait for 3 months for everybody. And we buy nothing else, only buying Dangote for us to finish before. So that market. So our market is efficient, but it's also illiquid. Another big thing is about unemployment rate in the country. So people are looking at that, not in Nigeria, unemployment. So it's market efficient. Are there increased flows? Is there unemployment in the US? You'll see that numbers are beginning to show. One, the jobless slaves. Two, the level of unemployment as it drives into the election season in America. Having said that, these are if you were an investor in the last 12 months, so to speak, you invested in US equities in Q1 this year, you would have lost 4.68. Inflation rate if you invested in Nigerian equities, you would have gained, I think, 10%. US equities, you would have lost 4.68. The inflation rate in Nigeria is 15.7. So you would have gotten US equities, you would have gotten minus 20. But if you adjust it for the exchange rate, so these calculations are wrong in the sense that in this quarter, the Naira has lost how much? So even if you took your money out and lost 4.68 in the US equities against inflation of 15.7, the fact that the Naira has lost about, God knows, maybe 20 or 30%, you have actually made profit of about 10%. So we'll adjust this and correct it. If you invested in Nigerian equities and you got 10% in Q1 and inflation is 15.7, you would have lost minus 5.7. If you invested in Nigerian treasury bills, you got 4% for 364 days. So you will have to divide that, right? Because 1 quarter, you have to divide that by 4. So you got 1%, right? 1% as against 15.7, you would have lost about 14.7. That's how the calculation is done. Then real estate, you got 15% per annum. Quarter, you divide it by 4, you get 3, and then you get as against the annual rate of inflation of 15.7, and you end up with negative. If you invested in Bitcoin, Bitcoin was really bad. You got really beaten, right? And but even then, if you take the exchange rate into consideration, you find that your negative is not minus 14, your negative is probably. So whenever you are looking at, as a Nigerian investor, you look at the nominal return, you adjust for the exchange rate, and you adjust for inflation. Then you know whether you're making money or losing money by going to bed. Now, so we go to this. So now they worked it out here. In Q1, we lost minus 4.68. We got but we got Q4 return compared to Q4. Here you made 1.1, right? So again, this, like I said, nominal returns without an exchange rate adjustment gives you a picture. It's important, they are accurate, but they're not fully reflective of all conditions. Because this rational investor knows that it's better for him to have a dollar, because that he cannot pay his school fees in New York with Naira. He cannot pay a doctor in New York with Naira. He cannot pay a doctor in Ghana with Naira. Okay, so that's what you have here. So what's happening in domestic investment? Foreign direct investments dropped by 32%. Foreign portfolio investments, 50% of total capital imports, yeah. Foreign portfolio investment is what we call hot money, but again, it's money, and when you look at it, it's all Mauritius. Mauritius, and you know what that means? When you see money coming from Mauritius, no, Mauritius is a small country, but it's a tax haven. It is Nigerian money that has found its way into Mauritius that is coming back as foreign investment. So it's not new money. You're playing with mirrors here. All right. So somebody has taken his money out, invested in a private equity fund. The money comes back into Nigeria. I say, oh wow, good. The money has come in. It's money that has slipped out and that is coming back in. So if somebody stole your goods, and it's happened a lot where I come from in Nigeria, and they come and sell it to you. But this looks familiar. This goat looks like the goat that was missing in my house three days ago. Say, no, what's the name of your goat? So, and then you buy it back. So you bought a goat. You haven't. You actually bought your own goat, right? So that happens. It's part of the whole process. So when you are analyzing foreign portfolio investment inflows, you've got to ask yourself how much leaked, how are we paying, are we clapping because our own money came back. Remember they're saying that you scored a home goal, then you equalize and you give yourself credit for equalizing. When if you didn't score against yourself, there would have been no equalizing, you would have actually been leading. Now, foreign direct investment is the difference between one and the other is foreign direct investment is Guinness, Heineken is building a factory, a brewery expansion, then they bring the money in, invest in it, create jobs. Foreign portfolio investment is when people sit down and say, okay, buy me some stocks, buy me that. And those monies are hot money and they go way away. What are the pension funds doing? Pension funds put a lot of money, their net assets increased to about the 13 trillion naira mark. And this 13 trillion naira is not that people were putting more money in pension funds. It is because the money market and the equity markets are appreciated. And you can see the equity markets went up by 42% in the last year or so. So even though people are being fired and people are taking their money away, we are beginning to see this happen constantly. So market cap today, like I said earlier, 25 trillion. So I thought it was 17, it's actually 25 trillion. 25 trillion naira. And look at the average daily turnover. Right? The average daily turnover yesterday was about 3-something billion. The other day was about 4. When they said, so when I say, we always say in very thin trading. What percentage of 25 trillion is 4 billion? 0.00. That's not a market. That's an illiquid market. So one, is the market rational? Is it efficient? And is it liquid? If none of this, if none of the above, then you have to look at the efficient market hypothesis to see what it is. It tells you the story. All right. Our markets is a market connected to the economy. If the economy is doing well, is the market doing well? So we have what we call a bank-based economy and a market-based economy. Nigeria is a bank-based economy. Everything is about bank. That's why everybody goes to central bank to do this, central bank to intervene. That's you never hear of that anywhere else. It's the markets that determine everything, right? Yesterday's headline of the Vanguard was that total amount of commercial papers issued by top companies with 375 billion naira. What is that? Look at market cap of 25 trillion. 375 billion naira is what? 1%, 10% of 25 trillion, right? It's about 2.5 trillion. This is not up to 1% of market cap. And that's all the big companies raising. Why do they need to raise money? If they get money from intervention, if they get money, if they sell all their products forward, you cannot use your credit on MTN if you haven't paid in advance. That means MTN doesn't need any bank loan. Neither does Glo, neither does Airtel. Because you will not be able to make a call except you give them money. And you don't pay for every minute. After every minute, then you load again every minute. You pay in anticipation of the fact that what will I use for the next 1 week? And if some people even pay for the next 1 month. So they are leaning on you. They are using your money in substitute for the banking money. Then the bank take your money and central bank takes it from them on CRR. So the only guys who get screwed are you and I, who are just paying out and waiting for value. Okay, so that is the way I want you to understand it. Therefore, when we are trying to buy into the stock market, we look for those who don't need to borrow any money, those who lean on their customers, who customers don't care, right? And all of us are there. And you look at everything. When you look at everything, one thing that comes out, consumer goods went down by 4%. Is it surprising that consumer goods went down by 4%? Is it surprising that oil and gas went down by 6% when we are buying diesel for 640? When all of us are paying money to MTN and Airtel and everybody, so we have no money to buy consumer goods. And what are the ones that are doing well? Banking and insurance. Banking, insurance is not doing well. All the others are doing well. So they will continue to do well the way we see it. So one very important thing that you must note is that the inflation numbers that you're seeing in Nigeria today, inflation numbers are reflective of what the enumerators have told the Nigerian Bureau of Statistics, and they do the analysis. And they are saying that price of goods in the last 1 year have increased by 15.7%. Right? It's up to you to decide whether you want to believe those numbers or not. Those numbers look like a fairy tale to me. But I know what I paid yesterday. I know what I paid the day before yesterday. I know what I paid. Right? I know how much I'm paying every day. So, well, it appears to me that that inflation is much higher than what is being published. If that is the case, it won't take long before the answer to inflationary spiral typically is to increase interest rates. But there are two dimensions to inflation. There's the cost push factors and the demand pull. Normally you use interest rate to suck away extra liquidity when there's demand pull inflation, because by doing that, you increase the marginal propensity to save and reduce the marginal propensity to consume. But if it is cost push, what happens is that people just buy less of certain things and switch to the others, right? Whether you increase interest rates, in fact, there's nothing to save, because you can have a situation where you are consuming more than you're earning, where we have what we call dis-savings. In other words, I earn 100 naira and I spend 120 because I'll take 20 from my savings account, or dupe my mother, or the money my mother gave to me to go and buy pepper, I use to buy a recharge card or something, or dupe my cousin, or swindle somebody, mug somebody, do something. That's what's happening. So you can see that the correlation between petty crime, petty theft, and cost push inflation. They haven't done that behavioral study yet, but I can almost bet that there's a correlation between that. Everybody's trying to swindle everybody. Not because they were not criminals before, but they have now become criminals out of necessity, right? So we are seeing that as phenomenon. Real estate, I've explained to you real estate. The basic thing about real estate, like I said earlier on, is that real estate, there's a correlation between new housing starts, new investments, and the election cycle, especially not the re-election. In other words, Buhari was re-elected in 2019. So people bet on that and say, don't worry, he'll be there, he'll make sure he stays. Because only Jonathan, and Jonathan actually lost. He had won 2 elections. He inherited Yaradwas, and he won 1 election. The second election was when he lost. So typically, people, when you know that the man can no longer come back by constitution, then you are sure that there will be a new EFCC chairman, new this, new that, so the people leaving office know what will happen because they know what they did to the others. And therefore, all of them are going to be laundering money, buying buildings all over the place, taking their money through the forest. You hear in Jam, where the snake swallowed some money and all that kind of thing. Those are the kind of things that happen when we have 330 days now to the election. And so people are becoming more desperate to move their money out. And that's why you're seeing a lot of real estate building all over Bodil on both sides, all over Gerard Road, both sides. So we are beginning to see a lot of that happening. Now let's look at stocks that are doing well. In this market, we've seen Dangote Cement, its revenue grew by 33%, its PAT went up by 32%, free cash flow up 45% to 438 billion. The market the stock price is selling at 21 times earnings, right? And the dividend yield is about 7%. So if I bought a treasury bill and I get 4% for 1 year, if I bought Dangote and I held it for 1 year, I'll be getting 7% dividend yield. But the fact that my Dangote price could go down So year-to-date return on Dangote stock is about 6%. So divide that by 3, multiply by 12, so 2 times 12, 24%. So they are doing fair. That's if it goes in that direction, but we never know. MTN story is quite interesting, up 23% this year so far. No revenue growth, 1.6 trillion naira. Look at Dangote. Dangote is 1.3 trillion. That's Dangote cement alone, not sugar. And look at MTN, 1.6 trillion in 360 days. We divide by 12, right? 1.6 trillion divided by 12, and then divide by, in fact, divide that by 365 days, you'll know how much they're making per day. But even the PAT is about 298 billion naira. Basically, these guys make maybe 2 billion naira every 2 days. So they make about $1 billion naira PAT, about 800 million naira PAT every day. So the more you talk, the more you do your bundle. The free cash flow is 468 billion. In other words, they make about 1.2 billion naira a day for free cash flow. Airtel is in dollars, so it's Airtel Africa, so we're not talking about Nigeria alone. So Bua Cement, I see Bua Cement 257 billion, where even though it's a big company, its revenue growth, its revenue is 1/5 or 1/6, less than 20% of that of Dangote Cement. And its free cash flow, 95 billion, while Dangote's free cash flow is 438 billion. Nestle is making 352 billion revenue growth and PAT of 40 billion, and the free cash flow actually negative, while Nestle has bet against the naira. Okay, so this is a story. Nigerian Equities, they ask you, do put 30%? No, US equities 30%, Nigerian equities 20%, Treasury bills in Nigeria 40%, and real estate 10%. That's one. So what are the indicators we are watching? I've talked about inflation, interest rates, exchange rate, GDP, stock market capitalization. I've touched all of these things, but look at the numbers between Q4 and Q1. GDP growth has been actually declining, even though it's compared to the previous year, it increased. Money supply has grown, which is looking green here, but when money supply grows like this, it's actually red. Inflation has actually deteriorated, showing red. 90-day treasury bill has actually come down, showing red. Bond yields have actually come down. So all of this is pointing to some form of macroeconomic instability. The exchange rate has gone to 587, and I hear this morning it's 588 or 589, and God knows what's going to happen, because Salah is on Saturday, and we're going to do the lesser hedge, and you need to take some money out. So those are the things that are driving the movement right now. Okay, but in all of this, the rich are crying, but the poor are getting poorer faster than the rich are losing money. So disposable income is coming down, and some companies, I think yesterday's paper said some state governments have actually slashed salaries while some are not paying regularly. So what are the sectors that are interesting? Public sector, increased spending on road and rail infrastructure are growing. When we prepared this presentation yesterday, of course, the guys who were preparing it did not know that there will be what happened in Kaduna Rail would have happened. So are people going to patronize the rail in this circumstance? Even in Lagos Ibadan rail, it comes back to security. So we'll defer that conversation to when we get to the risk element. Affordable housing and shift in housing towards where the rail infrastructure, all of this infrastructure is of no use if the security situation deteriorates. I want you to imagine if somebody blows up the Faloma Bridge this night, what will happen to just one fire under the Eko Bridge, and it has cost. Yeah, and what happened? The investigation has shown that the people were storing petrol. So the cost of petrol shortage and subsidy is not just what the calculations you make there. Somebody in his wisdom decided to keep petrol there. And then some heat got there and blew it up. What is the result? The result that Eko Bridge has been shut down for damage and maintenance. The man hours for the whole of Lagos because of that jerry can that was kept there, because people think very narrowly in this country. I want you to compute the cost. So is subsidy only 4 trillion? No, the subsidy cost is 4 trillion plus the cost of maintaining that Eko Bridge, plus the cost of downtime of all the people in Lagos who are going to spend 30 minutes, 1 hour more because of the congestion. That is the true cost of subsidy. Anybody who studied any form of economics should understand that we have what we call the opportunity cost in economics. Telecommunication. Well, when everything fails, since we can no longer move because we are afraid to go by rail, we are afraid to go by air, we are afraid to go by road because of kidnapping, we have no choice but to have this kind of conversation with all the participants here. At least nobody is going to come and kidnap you in between the Zoom. And interestingly, I was listening this morning to BBC radio, because BBC radio is 10 times better than television. And they announced something. There was somebody in Finland who had a cardiac arrest. And the thing about a cardiac arrest is that you have a window of about 30 to 45 minutes when you can intervention, right? And you come back to normal. After 45 minutes to 1 hour, the irreversible brain damage sets in, and then another 10 minutes, person dies, right? And that's what happens. Now, this guy felt some woman was waving a red flag or something on the road. The man dropped up there. The man was a doctor or somebody, and he felt the pulse. The pulse was gone. So as far as we're concerned, the man was dead. Then he used an app and sent a message out. In those parts of the world, even in the US now, they have the drone technology. They were able to drone a defibrillator, because what the person needed was a defibrillator. Once they took the signs, the defibrillator was drone, and that defibrillator landed there within 7 minutes. They flew it, defibrillator was put on a drone, and the drone flew with no traffic. And that man survived. They have it in Kenya right now. So drone, I'm just trying to talk about the opportunities, because in this slide here, I talk about the opportunities of 5G network and internet penetration. It doesn't drill down to the fact that this kind of technology, telemedicine, where I know people who passed on because they were rushing to hospitals in traffic and never got there. And by the time they got there, right? So many people that had cardiac arrest and died for no reason. Those guys would have been, you see that guy who fell in the stadium, Eriksen, who was playing for Denmark. He's back playing international soccer. Anywhere else, from the stadium, they brought, right there in the stadium, they had things to, and that's what they use. They use a defibrillator to salvage him, and today he's back playing football. So again, technology to be able to bypass traffic congestion and all of that. Hospital, and that is what is happening. People get knocked down, internal bleeding, which is the simplest thing to cure, and they go on, they are rushing to go and see their doctor here. You will not get to that doctor if the decisions are not made instantaneously to salvage you. So that's the biggest brain drain. The brain drain is not people going to get passport and visa to travel. The brain drain is we lose the lives of people with high potential to our negligence and carelessness. We lose the lives of people who, yesterday, the explosion in Norway was an Okada rider in between two vehicles, and then the explosion, and 6 people died that we know about. And everything was damaged in nowhere. Lagos-Ibadan Expressway that we're about to open before the end of the year. We've been building it for the past 20 years. So because of the inefficiency and infrastructure weakness, the opportunities in telcos are much more than can be laid out here. So then you fast forward to even financial inclusion and the seamless payment system. So it is now clear that, like I said, if you forget your card or forget your phone at home, which will make you go back first? No, there are 3 things: forget your checkbook, forget your card, or forget your telephone. And you've left home about 30 minutes. Which of them will make you go back? The answer is very clear. Because if with my phone I can come, when I can make payments, with my phone I can send messages, with my phone I can do it. But with my credit card, I will need to go to an ATM or somebody else to accept my POS and all that. And with my checkbook, nobody, the bank has to be open. So it answers all of the questions, right? But again, it's about thinking. What I've tried to share with you, this audience, is how to think about it in a manner that makes sense. Because thinking is so difficult. Very few people in the world engage in thinking at all. Very, very few. Because people just act based on, like dummies. Very few people sit back and say, okay, let me think about it. This is the way it is. This other thing, sectors are manufacturing, backward integration. Most of these sectors, manufacturing, you need foreign exchange. You need logistics to carry the goods, your raw materials to your factory. You need the goods have to be from your factory to the market. They have to be stored. People have to buy it. So these sectors depend so much on other, but these are the ones that create jobs. But the enablers, which is the technology, and the technology, simple. You have the base stations. You have the generators in the base station. You have the solar plants there. And that's what it is very clear. Now, those people that invested in solar plants, very clear. The hospitals, Lasso Hospital in Ikeja, they've had 30% less casualties because they could carry out surgery without blackout, where there's solar. It's clear that the amount of robberies where there are solar plants which are saved is less than when there's pitch darkness. So when you talk about manufacturing and then you talk about alternative energy, these modern technologies are what are driving everything here. So when you talk about entrepreneur of the year and people are asked to vote, people will vote for Dangote, who is building a refinery. But I love Dangote, but I will vote for Main One or somebody who has introduced the cable that will enable telemedicine, save the life of a young man who would have just died for no reason because, or the solar plant that will make that person survive, right? More than things like that. So, okay, we've talked about efficient rail system and culture, which is good. People must eat and people must feed. Insurance. These are sectors that depend to a large extent on a safe environment. What are the things that we have to worry about? For inflation, because inflation goes up, interest rate, that means in the next meeting in May, we are likely to see an increase in interest rates. Not just because of Nigeria, because everybody in the world is going that direction. Nigeria cannot be an outlier. So we are dealing with higher wheat prices, aluminum prices, Ukraine, wheat, sugar, everything. So whether we like it or not, everything, diesel up to 94%. So the exchange rate is 590 going for, who knows. So why will interest rates increase? They will increase whether we like it or not. And once interest rates increase, the stock prices will come down, real estate values will come down, except for money laundering real estate projects. That's why we are saying that prepare yourself for that. Oil prices will fall, no question about that, because of Iran, because of Venezuela, and America needs lower oil prices. What will happen to your exchange rate? Exchange rate is quite clear. It's not static equilibrium or partial equilibrium analysis, general dynamic equilibrium analysis, which means that these variables that in the input-output model are changing. The more the variables, the more likely that it is almost impossible for a policymaker to get it right. And therefore, it's not a simple equation, it's a quadratic equation with multiple unknowns. Because there are 2 unknowns, 3 unknowns. No. Now you have maybe 50 unknowns. That's why they've taken it to that input-output econometric model, which can tell you so many things and narrows it down to the number of things that you can do with limited negative impact as against. So it is not as simplistic as it is, but we have to make some assumptions. And so some basic facts that your export should be more than your imports, that your terms of trade, that is the price of your exports, should increase faster than the price of your imports. 3, that your exchange rate mechanism should be normal, therefore inflows, even if you have a shortfall, inflows will come in. And if you have a shortfall, you will get an IMF support program. All of these have shown that even with Russia, with their exports, with their $620 billion of reserves, they can't even touch the reserves. Their currency has crumbled, their system has. Why? Because the Western civilization made sure that their confidence eroded in their currency and the economy. The Russian economy is still what it was when they hosted the World Cup a few years ago, right? Things are looking well. Chelsea was winning all the games and everything, but now it's a different story. Will it be the same in another 2 or 3 weeks? Well, we will not go back to where they were, but again, they will pay a high price for being the invader who lost. So our currency will come under pressure. There's nothing we can do. We have delayed making decisions, and the pressure will continue. But it will begin to correct after a while, to correct itself, and because we will begin to do the right things subsequently. The policy outlook, like I said, first subsidy removal has been postponed, but it will have to happen, but not in one fell swoop. We are going to be able to remove it in stages. The exchange rate unification process will start, and as it happens, then the currency begins to get stronger over a period. MPC will not maintain status quo; they will actually increase interest rates. So ignore that. They maintained status quo before, but we are looking forward, not future, not past. So we say increase. It could be. I think, to be honest with you, it's going to be a much more aggressive increase, because the inflation numbers that will come out, based on what I can see, both political and economic, the inflation numbers for March are going to be will look very tough. I can't see how maybe food inflation will not spike, but all other forms of inflation. I bought a ticket to go to Benin last week. It used to be 25, it's now 66 one-way economy. And so it's 125,000 naira coming back. It used to be 35,000 naira a year ago. It's now 125,000 naira. And I couldn't get a seat just to go to Benin City, 45-minute flight. Abuja is a different story. It's at 200,000 naira. That used to be about 25,000, 200,000. When we used to go for our meetings, we used to go 4 or 5 of us used to go. And what 4 or 5 of us paid that time is not what one person paid now. So thank God for Zoom. There should be more Zooms. Now, what are the risks? That the Russia-Ukraine conflict will become a world war? No, it's not going to happen. Supply chain disruption will be there, but we'll get over it. Global inflation will increase, but then begin to come down after this war comes to an end, which I think will come to an end very soon. There'll be a ceasefire and all of that. And then Russia will lick its wounds. Oil prices will come down. So that's a big risk for us as well. And then we'll go back to normal times. So there'll be another boom cycle, and I don't think there'll be a global recession as the markets are afraid of. So what are the fallout for Nigeria? Nigeria already is in a debt crisis, so the debt crisis remains. The oil price shock, if it comes down to 70 or 60, before 70 was a good price, but now even 70 is give us a shock because we are into this election cycle. Will there be protests in Nigeria? I doubt it initially, but again, elections can bring about anything, we don't know. Higher import costs, can we deal with wages? I'm not too sure that we can. So in summary, GDP growth will remain positive, but very mild. Structural defects, foreign exchange market will remain major growth constraint, but I think that will be solved. I think we'll go back to a bit of a normal foreign currency process. Inflation will remain high because of initial shock, but then it will taper later on when global prices begin to reduce. Investors, interest rates will increase. There will be a trend. There will be, how would I put it? Stocks expect to shut off gains, not backed by strong fundamentals. Political uncertainty will make investors trade cautiously, like all of us on this call. So this is time for caution. Thank you very much, ladies and gentlemen.
Thank you so much, Mr. Bismarck. As always, it's such a thought-provoking session. We just had a few questions. It's interesting you talk about real wealth and the mobility of that wealth. Many Nigerians mentally dollarize their income and their spending. So you want to buy, you're already calculating it in the real cost in terms of dollars. So we're wondering, isn't it a double whammy if you're losing value in terms as a result of devaluation and security concerns and all these issues, yet you're investing, so what you find is that people want to invest in, dollar-based investment classes. So, how do you balance that off? Because if your equities are increasing in value, but in real terms, based on the dollar value, you're losing money, it looks like it's a game of, where to lose the least money.
The reality is that two things have to drive. It's the fact that what you want.
Sorry, there's something wrong with the audio. I don't know if it's me.
Yeah, can you hear me?
George, can you hear him?
Am I audible?
Yes, do you are very audible. You're very audible.
Yeah, Bismarck.
No, the voice is hushing.
Yes, your something audio.
No.
Okay, so I think he's exited to come back in. There's something going on with his audio, so please just hang on a minute, everyone. Okay, I have him back on.
Okay, can you hear me now?
Yes, that's much better.
Okay, thank you. Now, what I was trying to say was simply this, that Nigerians, or as rational consumers, we must differentiate between what we want and what we need. We place a lot of emphasis on what we want as against what we need. There are some hard decisions we have to make. You can't, the fact that you ate bread and eggs yesterday does not mean that you eat bread and eggs today. A friend of mine went on a flight yesterday to Atlanta, and he got into London, and the flight to Atlanta was at 2 o'clock in the afternoon. We moved into the Sofitel, and believe you me, the temperature in England was 10 degrees centigrade. For 5 hours, there was no light in the Sofitel, no electricity anywhere. Why? Because the price of gas has increased. If that can happen in the UK, all the Nigerians were screaming, oh, I said, well, fine. They made a conscious decision to forsake certain things, right? Because of what is happening in Ukraine. So everybody had 10 degrees, okay, we manage, wear your coat and just manage. But we, people that were traveling in between, couldn't, Now, you have, when things become difficult and your income cannot meet your wants, you have to now use your income to address your needs, right? So you can't eat that cake and you still be there. After you've eaten it, it will not be left on the table. You've eaten it. As a country, as a people, our expectations have to change. We cannot have that which we had last year, this year, when there's a danger. Whether you change your government 500 times, it will not put food on the table. I think that's right. So, but having said that, that is not an excuse for inefficiency and corruption and the other thing, because those even make it worse. So what was a bad situation becomes worse, and what was a worse situation becomes a catastrophic situation. Now, having said that, because you are desperate to use, rather than you do what you need, you do what you want, you now begin to invest in high risk options because, oh, I must go on that trip. I must go to Dubai. There's somebody having a party. Somebody is doing this. I must buy that car. The time for all of that rubbish is over. There are times when, like I said, creating wealth, preserving wealth, managing wealth, and optimizing wealth are 4 different things that we're looking at. Now, at this point in time, we should be preserving and optimizing, because you may not be able to create wealth in this environment. The time for creation of wealth will come, right? That will come. And you can see that, right? Because we do not know. The things that we do not know are very many. So for investors who are on this, and I can see we have 226 participants, what we'll be looking at is how to preserve our wealth and optimize our wealth. Because once we bottom out at this point of inflection, after this crisis, there will be a lot of opportunities to make wealth. And you make money by going to bed. Nigeria will also make its situation better. There will be policy changes that will take place so that this market becomes also attractive. So I'm optimistic that soon, when I say soon, I cannot tell you what soon. Soon could be 1 year, soon could be 2 years, but soon, or let me say, with time, things will change for the better, significantly for the better. Yeah, there's no question about it.
Great, thank you very much. In terms of Russia being SWIFT, and seeing as how Russia being one of the largest producers of oil, they are holding up, going to be affected. Russia deal in dollar-based. Do you see that the value based on the fact that it will be transacted through?
No, let me answer that question. OPEC is meeting in a few days, right? There's a lot of pressure on OPEC to increase production. OPEC says no, because Russia is a part of that process. The UAE voted with Russia, but the pressure is building. The Americans, the Canadians, the Europeans, the British are putting pressure. Nigeria was approached to increase its gas exports, right? I think that has happened. And so at this point in time, Nigeria is going to have to ask the question, am I going to go with the Chinese or Russians? Nigeria did not evacuate its people from Ukraine because they believed it. Russia kept on saying, we are carrying out a military exercise, we're not going to invade, we're not going to do anything. And any other people said, okay, no. But America said Russia is going to invade. Intelligence says that Russia is going to invade. Americans evacuated their people, after what happened in Afghanistan. They've been evacuated. Nigeria said nobody believed. They met with the Russian ambassador in Ukraine, and the Russian ambassador said, no, don't worry about it. And now we know better. Okay? So Nigeria has now learned a lesson that, look, you know what? It's time to now believe that which you have to believe and take, the global environment, whether you like it or not. This is a war. It's a proxy war. It's a proxy world war. The Russians have lost. It's not over yet, but a ceasefire today, right? The Russians have lost. The Russian oligarchs are out. They can't even go to their yachts. They can't do anything. And when you lose a world war, you pay reparations. You pay a very high price. You know why Taiwan is not part of China? Because the Chinese sided. Japan was with Germany. So Japan, the nuclear bombs were dropped in Hiroshima and Nagasaki. No Japanese can be the head of the United Nations or head of the World Bank. No German will be. If you lose a war, you pay a high price for it. They will call it reparations. You do not share in the spoils of war. The people that win a war are the ones that share in the spoils. As far as I'm concerned, my mind is the war is over. The Russians are going to pay, and the Russians and their allies will pay a very high price for this. It will take a lot of time. So if you want to ally with the Russians, that's your lot. That's what it is.
Okay, thank you very much. Someone is asking, what policy measures do you think the CBN should adopt to unravel instability in the foreign exchange market?
Well, the currency market is just one of many markets. Fertilizer, 5,000 in November. It's now 16,000, going 17,000. We've opened the biggest fertilizer plant, second largest fertilizer plant in the world, largest in Africa. Indorama is there, Moderator is there. Whether you open it, once a market structure is dysfunctional, the price outcome will not be equilibrium. So no matter what you do, right, until you make that market structure efficient, the price. Let me give you an example. If you bring 100 tankers of petrol into Lagos and they are stuck at mile 12 or K2, right? The supply will increase, but it will not get to the market, right? Because there's a bottleneck. So I think that the central bank.
Okay, I think we're having some technical difficulties with Bismarck's connection. Please hold on. Let's see, we're trying to get him back online. Okay. You're muted. We can't hear you. Okay, go ahead.
I'm muted.
Yes, you were frozen, then you were muted, but we can
Can you
hear
hear me now?
Yes, we can.
Yes.
All right. So I'm saying that whether we like it or not, the market structure of the foreign exchange market will change. And it will not, they are not going to announce it, they're going to change it, but I'm sure they're going to, it's work in progress. So I wouldn't panic too much about the foreign exchange market in Nigeria. Just assume that an inefficient market structure cannot persist for too long. And the central bank is working on it very hard for that matter. But it's not just the exchange rate is only one. I use fertilizer as another one, use price of petrol as another one, price of diesel. So all of these things have to be in equilibrium. Unfortunately, wages have been static. And the moment you kick wages up, then you will have the basket will collapse. So we have to manage. It's a very, very complex situation. So I think the central bank, with the price of oil the way it is, with the reserves the way they have enough resources to manage this, and they will manage it more efficiently for now.
All right, great. Thank you. Yeah, we pray. When you were speaking, you talked about the cost of your air ticket, for your trip, yes, all of that. What are your perspectives when it comes to carbon credits? natural capital trading as an antidote to cushioning the effects of, the attendant challenges. I mean, you see it with the likes of BA and the international carriers, carbon credits and all of that.
I hear you.
What opportunities do they portray for the Nigerian economy?
You're damn right. Lafarge, one of the reasons why we like people to buy Lafarge has been benefiting from carbon credit. You know why? Because they're using compressed natural gas for all their trucks that move their cement all across the country. They're also using alternative energies to power their affordable housing, what they call concrete aggregates. So you will see that Lafarge profits are lower than that of Dangote and Bua. But if you drill down, Lafarge has greater upside than this because they've gone full ahead and they're getting all those carbon credits from Europe. And they're doing a lot of great things which people don't understand with technology. So it's an important thing. Somebody posted on Twitter yesterday or the day before that if you polish your solar panels and clean it, you get 6 times more output than when it's not cleaned, especially in, say, Harmattan period and all of that. So there are people who just sell solar panels and they keep it there. What you are getting from your solar panels will be reducing every time after. I want you to imagine if you don't wash your car and park it outside for 2 weeks, and you need the reflection on that car to powder your face, right? I would like you to go in front of the windscreen outside and see what picture you see as a distinct from when you wash the car and take that picture, right? That is what, so it's good enough to put the solar panels. If you don't have the technology to clean it, and if you climb up and go and fall on it, you'll break the solar panel. So there's technology for washing without going out there and falling and breaking the solar panels, right? So I'm trying to actually illustrate a bit better what the points you are making. It's not just about carbon credit and sustainable goals. It's even maintaining it, right? So 1, we need solar. 2, we need carbon, compressed natural gas and carbon, right? Carbon credit. We also need to maintain the solar panels so that they can get the power, right? In Nigeria, we buy things and we don't maintain them, right? So those guys who provide maintenance infrastructure, facilities management, those companies, when they get quoted or even if they are not quoted, those are things that we should be buying into as an investor. Okay, so if you have all of this alternative hostels, that's a big new investment now. One is construction in the highways. The other one is alternative hostels for the universities, where the facility managers are doing that. And those ones have become highly profitable. Some of them are getting quoted. Yeah.
Absolutely. Amazing. Thank you. We have a deluge of questions just pouring in. But we have to stop here. We'll just take one last question. And I think that slide you showed was disturbing. The slide on, the negative returns and all of that. And somebody was asking, what in terms of achieving positive real rates of return, what exactly should retail investors be doing?
Okay, I guess there are retail and wholesale investors, but let me put it this way. The goal in economics, you maximize return or you minimize losses. When there are shocks, there are no time for returns that time. All you do is you minimize your losses, knowing very well that if you survive, he will fight to run away, will live to fight another day, they say, right? So because you made profits in the past and you didn't lavish everything, you have a cushion, right? So that's why when you look at Access Bank, the GT Bank, and you look for what retained earnings and reserves. What do those reserves do? Those reserves give you a buffer. So when there are times like this, and let me tell you, the good times don't last for all the time. There are some good times and then bad times, but typically the good times will come again. So what I want all investors here to understand, look for those companies, look for those assets where there are some reserves, to withstand this interim shock. Remember, I used the word soon. Soon. I kept on using the word soon. 1 year, maybe not as long as that. Once you overcome that, great. A lot of people didn't overcome COVID. Today, COVID is like, oh yes, what it means nothing, right? But 2 years ago, COVID was a kiss of death. Right now, it's a different story. I can walk into a room with 500 people with COVID. Are you vaccinated? Okay, good. Right? So that's it. The world changes. So this little piece, this time has changed. And I'm looking beyond. A lot of you are looking at watching CNN. I have gone beyond that to say that the war is over, as far as I'm concerned. And I'm in a post-war analysis scenario right now. Thank you.
Thank
All
you.
right.
It's been an amazing time. I'm sorry, we can't take any more questions. Thank you so much, Bismarck.
At Alpha Morgan Capital, we know that wealth creation is not just for you alone, but for the next generation as well.
That's my boy!
Congratulations, dear.
We at Alpha Morgan understand that every effort you make daily is a journey to create sustainable wealth. That's why Alpha Morgan stays committed to helping you sustain generational growth in wealth so you can focus on other things. Alpha Morgan, funds management, investment banking, financial advisory. Alpha Morgan, your investment banking institution. Go to www.alphamorgan.com. Call 081 51 71 7171. Alpha